You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 18th day of October, 2018. Hope you're having a great Thursday, whoever you are, wherever you are. We're just glad you joined us here today. I've got a chart up of the S&P 500 Emini Futures. If you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions, and within 30 seconds, you'll be registered through the end of the month. It only takes 30 seconds to register. The registration is good for 30 days if you do it on the first day of the month. 30 seconds for 30 days. Not a bad deal. All right. Also, we have a dual stream available at youtube.com/CFRN/live. Bookmark that page so you always have one-click access. And for a little bit of news, The CME has revealed that Bitcoin futures volume rose 41% in the third quarter of this year. This trend attests to the growing interest in Bitcoin from the traditional financial markets. 41% in Q3. Open interest was up 19% over Q2. Let's just see what that looks like. Well, unless we're looking at the wrong thing, it's still not a whole lot of volume. I got a feeling we're looking at the wrong thing. They keep it, yeah. I think we are looking at the right one. No, because they, the chart they're showing. Oh, here we go. We'll do this. Now, okay, this is monthly. So far in the month of October, 26,000 contracts. Okay, and in July, 133,000. Looks like a decline to me, but hey, I read it on the internet, so I'm sure it must be true, right? Guess we'll find out. If you're wondering where the zone is below us, it's 2763/64. Swing low so far, 68. Tether, whose Twitter account sees activity approximately once a month, broke its silence to take aim at Cameron Winklevoss, owner of Gemini Exchange's rival GUSD stablecoin. A war of words over Tether's inability to publish a full audit of its USDT dollar peg token has erupted, with Bitfinex Tether defender Whalepool asserting that no fiat-backed stablecoins are fully audited. Thank you for, this was Winklevoss's response. Thank you for continuing the long-standing tradition in crypto where the default position is to go out half-cocked without any expertise or knowledge in an area and pretend to know what you're talking about. Oh, those Winklevoss twins. Yeah, am I right? Let's see if there's anything worth mentioning in the world of technology today. I think there is. Hey, man. Apple stores. Hang on. Apple stores are now selling a $2,000 self-flying drone you can control from an Apple Watch. Most people don't think of Apple stores as a good place to buy a drone. Yeah, I never really thought of it. but yesterday it started to sell one of the most interesting quadcopters for consumers. At select locations, Apple will now sell a high-end drone called the Skydio, S-K-Y-D-I-O, Skydio R1, which cost $1,999 before taxes, and is designed by a company founded by former MIT students and Google employees. The difference between the, I want to call it Skydio, but the way they spelled it, it's Skydio. Alright. To me, it'll always be the Skydio. And similar drones is, the difference between the Skydio and similar drones is that the Skydio basically flies itself. That's the problem I had with the ones that I got over the last few years. One here, one there, Christmas or birthday, I don't know. Flying those things, they make it look easy in the movies. DJI's quadcopters and other competitive drones still are based around manual control and require the drone's pilot to control where the drone flies. Skydio CEO Adam Bry told Business Insider that he believes that the R1 is the most advanced self-piloting vehicle consumers can currently buy, comparing it not just to other drones, but other robots and cars as well. The Skydio, in contrast, is more like a robot or an autonomous camera. It uses a series of sensors and machine learning models to dodge trees, follow you or other subjects, and capture video or photos without a lot of manual fiddling. It's always nice when you don't have to fiddle, especially if you're not a fiddler. Now the drone can be controlled by an Apple Watch, which is one reason that Apple stores now carry it. Although you won't be able to see a live preview of what the R1 is filming on the Apple Watch's tiny screen, you can control flight modes, have the R1 follow you, and even pick individual people for the drone to follow and film. Ooh, this sounds like trouble. Nine to 5 Max Zach Hall said, I tested Skydio R1 from my Apple Watch during an outdoor bike ride. Now, this guy, he can ride a bicycle and fly a drone at the same time. That's pretty good. He found the new watch app very useful. Skydio R1 is really good at keeping up with you even around sharp turns while avoiding obstacles like trees, and quickly changing flight modes from the watch without using the phone can be really convenient. The simplest example is just switching between modes of how the R1 flies around you, in front of you, behind you, beside you, and how close it can fly to you. One of its main promises is that it allows users to spend less time piloting a drone, but it can still capture the kind of overhead and zoom out shots that pop on social media. It's kind of a it just works drone. Yeah, that's the kind I didn't get, which makes it a good fit for the carefully curated Apple stores. Skydio is backed with $70 million from elite startup investors, including Andreessen Horowitz and Excel Ventures. And now, ladies and gentlemen, I bring to you the Skydio. Not a bus schedule. There we go. And it's off. Look, Ma, no hands. It just flies. Okay. Chase you around the yard. Yeah. Till somebody hacks it and it takes your head off. Well, good luck, folks, with that. It looks wonderful. Very nice. Nice work. Okay, let's take a look at the numbers from around the world. These will be the cash markets. We'll talk futures in a second. Here in the U.S., the Dow's currently down 310 points. NASDAQ down 134. S&P 500 down 35. The Russell 2000 down 22. That puts us down 1.25% on the Dow, 1.75% on the NASDAQ, 1.25% on the S&P, and almost 1.5% on the Russell. Big numbers. In the commodity basket, crude oil down 48 cents, trading 69.27 last. And today we rolled into the Z contract, GCLZ. So any of the alerts that went out last night, Concierge Trade Alerts, the L2s, were all the X. Anything from this point forward will be Z. Okay. Gold at $5.40, trading 1232.80 last. In the Asian markets, the Nikkei was down 183 points at the close. The Shanghai was down 75. The Hang Seng was down almost 8. Last but not least, the European markets, the FTSE lost 27. DAX was down 126. The CAC was down 28. It was a red day in Asia and a red day in the UK and a red day here at home. It is a big red radio Thursday. Okay, let's go to Michael, get a recap of what happened in the live training room today. And then we'll be back and have a chat with John, take a look at the Concierge Trade Alerts and answers to your questions.
Here we go. Did you see that message, that text I sent to you about Dr. Tom? He wanted you to give him a call.
I did not. I will.
Okay. Okay. Well, I will. I will begin then.
Okay. I'll give him a buzz. Okay, so I've got the chart up, and I'll hit mute, and it's all yours.
Okay, great, great. Here we go. All right, good afternoon, everyone. I just thought of something. Can somebody type in something, anything, so I can put a link in there for you? Because I can't put a link in until somebody does. Thanks, Don. Thank you, Amon. Hang on. Here's what I want to put in here. Bert is going to be hosting a meeting this afternoon at 2 p.m. Eastern. 2 p.m. Eastern. There is the link to it. Okay. If you guys want to go. It's what we do in the room in the morning, but just in slow motion. You know, he takes his time going over everything. And I try to do that in the room too, but I get carried away with all the trading and all that stuff. Now, just wanted to post that there for everyone. All right, we'll start over again. Excuse me. Got something in my throat. It's 2 p.m. Eastern, Don. 2 p.m. Eastern. All right. Good afternoon, everyone. Today is Thursday, the 18th day of October, 2018. There's a partners meeting tonight, 9 p.m. Eastern. Partners meeting tonight, 9 p.m. Eastern. Okay. Let's see. if you go to the homepage, if you've not taken a free trial with us and you want to, go to the homepage at CFRN.net. And right over here on the right-hand side, it says 5-day free trial, apply.cfrn.net. Apply.cfrn.net. Yeah, I just thought of something else, Don, looking at your name. Did you get that email response that I sent to you? Okay, when you click on that, you'll be eventually brought to this page right here, where all we ask for is your email, your first name, and how you found us. Click the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? Once you click the confirmation link, we know you took the free trial, and we can help you out. All right? All right. Spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 18th day of October, as I told you. We made 19 ticks in crude, we lost 8 in gold, and we made 10 on the ES. That puts us at plus 235 on the day. Today, it took 40 minutes and 6 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 10 trades today. On the month now, we're at $3,351. That's over 14 days, averaging $239 per day. On the year, we're at $28,751. That's over 193 days. That's averaging $148 per contract per day. Now, I put this column in today. This column was here so I could have that column. But if you had 1 contract per month and you got these results, this is where you'd be right now. Okay. That's why I put that in there. Okay. Get to the trade. Gold, we only had the 1 trade that we stopped out on. Come on, computer. Again, computer. Come on. There were a couple of other opportunities in the gold, but we only took this one right here and we stopped out on it. Then it changed directions. There was a long opportunity there and another one right there. Both probably would have been break-even trades if I'd have done anything with them. A little later on, toward the end of the session, there was another one right here on the gold. That worked out pretty well. And since then, nothing. There hasn't been a thing since then. So the gold was moving, but it just wasn't giving many trade setups today. We didn't do anything with the euro today. Looks like there were a couple that we missed. We missed a short right there that probably would have been a break even. And along here that probably would have been profitable. I don't know why I didn't highlight this. Oh, because it was during the break. There was another long right there, and another long right there, and another long right there, all during the break. Then it changed directions, and it gave a short right here. And changed directions again, but it didn't give any trade setups on that side. And changed directions again, and gave a short right here that may have stopped out. I'm not sure. It would have been 65 up to, no, it wouldn't have stopped out. You'd have been okay with that one. Gave a short right there, and that was it for the euro. Okay, we didn't do anything with the euro today. Crude oil. Crude oil, we had a few trades on. Come on, scroll with me. Okay, on crude, we missed this opportunity right here, but we grabbed 5 ticks from this one. Okay, that was our first spot. And the next one, we missed a couple over here. Okay, I'm scrolling, waiting for the charts to catch up with me. Still waiting. Okay. Somewhere in here we had a trade that I didn't mark down where we picked up 9 ticks to get us to plus 14. I think this is where we got that. And then we had another one right here, I think, where we picked up 5 ticks. Yes, that is where it was. This was 9 ticks, and then this right here was 5 ticks to get us to plus 19 on the crude. Now, since then, there was a short off the BBC right here that would have given some profit. And that was it in that section. Now we're getting back to the more current stuff. It was a long from right here. Stop should be a break even on. And that was it for the crude. We ended up with plus 19 on crude today. Now the ES, we had more trades on the ES than we did anywhere else today. But most of them were break even. We only had 1 trade that did anything on the ES, and we picked up 10 ticks. The rest of them were all break even trades, and we had 6 altogether. Wow, a lot of movement here during the break. Scrolling. Scrolling. There was a short right there that we missed. A short right there that we missed. That would have been a break even. This one would have picked up some profit. I'll do it manually. Okay. There. We missed this beautiful short right here this morning. Then we had a bunch of break evens, and we had this. Oh, this is aggravating. Okay, well, we picked up 10 ticks on one trade, and we had 5 break evens on the ES. Okay, during the break there was a lot of movement. I don't know how many trade setups there were, but it's just too frustrating for me right now to keep trying to move things around when they're not cooperating. There were definitely trade setups in here, though. There was one right here, for instance, that I can see. There was one over here that I can see. Yeah, they were in there. There's a bunch of opportunity. Okay, you can see those that I showed you in the beginning that I had missed, and we broke through the weekly trading zone here, and it just started pushing down and pushing down and pushing down. Anyway, that is that. Let me bring this back up. Okay, we'll go through this again. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 18th day of October, 2018. We picked up 19 ticks on crude. We lost 8 ticks in gold, and we made 10 ticks on the ES. That's plus $235 on the session. And today it took 40 minutes and 6 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 10 trades today. So on the month, we're at $3,351. That's over 14 days, averaging $239 a day. On the year, we're at $28,751. That's over 193 days, averaging $147 per day. Again, if you had added 1 contract per month and got these results, then this is where you would be right now. Okay, that's a gross number. Okay, back here, if you have not taken a free trial with us, go to the home page at CFRN.net. Over here in the right-hand column, it says apply.cfrn.net. Click on that, and you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Click on the submit button. Once you click on that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? We don't know you took the free trial if you don't click the confirmation link. Okay? 10 EST trade for ES was at daily low. Why did I take it? It was not at the daily low at the time. It was near the daily low, but we'll go back and look at it. My rule for trading into the high or the low of the day, Don, is that you have to have enough room between your entry and the high or the low of the day to move your stop to break even. That's my rule. In this particular case, the one trade that I took, well, that I made anything on, anyway. And I'm trying to scroll. Okay, I'm almost there. This right here is where I shorted it off the BBC. The MA1 was red, the cycle was red. This wasn't the daily low, but even if it was the daily low, there was still enough room to get my stop to break even from there. But it wasn't the daily low because we had already hit the weekly trading zone once. And it came back up. And then I figured it was going to hit the zone again, so I put a 10-tick target right down here at the zone at 92. Because we had shorted up here at 95.5. And I put a target down there at 92, and I let it go down. Okay. And you can see right back here, it had already hit the weekly trading zone back here. This was the daily low at the time, I think. Oh, that's a 10:02. Yeah, I didn't take any trade there. At the time that you're talking about, I didn't take any trade in there. But the one that was a little bit after, you know, this was before. And the daily low at that point was right here at the top of the weekly trading zone. And then this pushed it to the bottom of the weekly trading zone. And then we missed one right there on the long side. Looks like we missed another one right here on the long side. And then we took this one. And I really honestly thought it was going to stop me out when it pulled all the way back up here. That was like minus 7 ticks right there. And I thought it was going to stop me out. And then it just slammed down. It just slammed down there. And I got my stop to break even. And then I saw the weekly trading zone down there. And I said, I'm just going to put a target down at the zone because I think that's where it's going. And it did. And that is when we got our goal for the day on that particular trade. Okay, ding. Yes, and I can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. And let me see if John's in here. John is not in here. Okay. Okay, any other questions? Anybody? Need a faster computer? I just need to reboot it, probably, Bart. It's plenty fast. I got plenty of RAM. Just need to reboot it.
Okie doke.
All right.
The recap.
Today it took 40 minutes and 6 trades to get to the goal for the day. At that point, we're up $120 a contract.
Per contract.
Yes.
Awesome. Today is Thursday, and Dr. Tom will be joining us at the top of the hour. And we'll talk about investment grade gold. In the meantime, we'll take a look at these futures here. Now, what are we laying blame on for the sell-off today? They always have something to tie it to. What do they come up? What do they cook up today?
I don't know. Bert was saying he thinks it's because the bonds are creeping. That's what he was saying this morning. Because interest rates are likely to be going up, and the bonds are creeping.
Oh, that could be. Okay, so this zone below us, which we alluded, 2764, 2763. Okay, now these are this week's zones. 63, 64. Okay. Above that, 91, 92. This one is not this week's weekly trading zone. This is last week's lowest weekly trading zone. Oh, that thing about by showtime tomorrow, blah, blah. Well, as we can see, that came to pass. There's not a lot of absolutes in the world of trading, but sometimes some things you just feel absolutely certain about. And so, we'll get all the clutter out, and then we'll take a look at this move that we had. I think John's there now. Hang on, let me just.
Yeah, I don't see him yet.
All right, that was John. He's going to pop in.
Okay. Oh, he's in. He's in. I guess. You want me to just open up his mic?
Yeah, that'd be just fine.
Okay. There it is.
Okay.
John, your mic is open.
Last night on the S&P 500 Emini Futures, when the alerts, the Concierge Trade Alert email went out, and it got them out last night at 7:55 Eastern. Consider selling 27.97 on the ES. Is that you, John? Okay, he'll be on the side. He said he was going to jump right on.
Yeah, I think he's trying to.
Okay, so 27.97. There we go. Now from 47.97, pretty obvious where we were looking to go. I would hope by this point. 27.97. Okay. Weekly trading zone right below, and we always expect a weekly trading zone to be good support until it isn't, and good resistance until it isn't. It just depends upon, as you can see, price goes from zone to zone, back up to this phantom zone, this hangover from last week, the lowest weekly zone, back down to the zone, and then we attempted this zone here, and you could, no, you really can't qualify that as a slice, but it may end up behaving exactly like one. In other words, as we approach 91.92 from below, we may find that good resistance there, and that may give us the leg back to 63.64. John, is that you?
No, that was me.
Oh, that was you.
Yeah.
Okay. All right. On this, now it's an extended move that you're able to utilize the indicators to effectively trail your stop. This has not really been an extended move compared to, say that move right there. Smaller candles, slowly climbing. Here, everything happened in about an hour. We initially triggered 27.97. We got down to the zone 91.92, so that's 5 points. Important prices, important areas are almost always tested. So price gets back above the trigger. Down we go again. Now this time we put in a swing low at 68. Yeah. 97. That's 29 S&P points. You know that number 29 has popped up too many times not to mention in the last few days. I don't know if anyone else has noticed that, but I mean, look right here. It's a 29-point move. What does that mean? What's the universe trying to whisper in your ear? You know, I have no idea. I just know I've run these numbers 29 times 50. Whole lot of times. Hang on. Hello?
Oh. Yep, he's trying to come in a second way. Okay. He logged off, logged back on.
Yeah, he must be having some kind of problems because he just called me again.
Can you hear me now?
Yeah, I can hear you.
There you go.
You're perfect.
Oh, okay. Hello, Mike. Hello, Dwayne. Thanks for the invite.
Glad to have you with us.
Yeah, thank you. Something weird happened. I couldn't get any volume the first time around. That's why I had to do
yeah,
kind
sometimes
of a quick.
it happens.
Yeah. So, boy, I tell you, these markets.
Yeah.
Sometimes.
I love those markets.
You know, I mean, obviously we're in a lot of trouble today because you know, everything we've been talking about for the past few days, unfortunately, is kind of happening faster than expected. I.e., if you remember yesterday, I said, you know, watch the afternoon. Well, it's happening in the morning. You know, we got the rebound yesterday. We really couldn't go any higher overnight. The highs of the night were put in pretty early, and it's kind of deteriorated since then. And unfortunately, I came in, I forget, sometime during the night, maybe about 5 o'clock in the morning, came in and I just sold everything right there, and we've basically been short right down to this, to the 737, to the lows today, 727.70 or so. Got this little rally, not putting too much faith in it. You know, we're already out actually and back short, and getting back long the VIXs. So unfortunately, I'm not too keen to try and trade in and out, because the last time we did that, you know, the market went to the days we went down 800. The market didn't have to, you know, once the sort of big rally was over, it was too dangerous to trade the other rallies to try and catch them, because what happened, the panic, if the panic starts to come in, the rallies get sold immediately, so they're not even traded, they're almost untradeable, and it becomes very risky. So it's a strange thing. I think I mentioned the risk of the dollar breaking out to the upside. It's kind of weird, because I thought that deal with Turkey might be dollar negative, because if you remember, when they imposed the sanctions on Turkey, the dollar went through the roof. So you'd think if they got the pastor back, that thing, you know, that the market might go the other way. It hasn't. I think the economy, the U.S. economy, is doing so well now, so strong, that the dollar is just, you know, par for the course. And you know, there's repatriation of dollars coming into the States. There's companies investing in the States. There's probably a ton of Chinese money coming into dollars, you know. So the dollar is stronger, period, you know, just the way it is. However, the good news is the gold is actually up $4 today in spite of it. That's a pretty big deal when that starts to happen. You know, when the gold is starting to run its own race, regardless of the dollar, that's usually pretty bullish, because the way it's looking to me now is we might actually break out even higher on the dollar, you know, possibly to 96.7, maybe up to 97.5, somewhere like that, or 97, say, and then we could turn down, and then we could turn down a lot, because this, you know, depending on, I mean, if we do have an 87 type event here in the next 4 days or so, it's probably it might cause a dollar sell-off. So, you know, you have to be ready for that. And look, I think the next sell-off in the dollar is probably going to be terminal. You know, that might be it. and obviously that could be very good, very bullish for gold. I mean, one of the most astounding things that's actually happened, and it's a good lesson. I mean, it's hard to, I mean, every single day when we make a new chart, even though you might think you know a lot about forecasting markets and stuff, I mean, you're basically betting on the unknown, a lot of the times. And I'd say the biggest lesson I've learned in this, in the last few weeks, is that when they did this deal between Rand Gold, GOLD, and Barrick, right. They bought Barrick for $6 million as a kind of a merger, really, $6 billion rather. You just should have bought that deal and close your eyes, just gone for it, because creating the world's largest gold company has turned out to be a pretty big deal. And this thing went up way more than I thought it was. I mean, literally, when they did this deal, the gold GOLD was at $60, and it just hit 82.65 this morning. So you've had a monumental rebound in these two stocks since this deal was struck, and it's leading the rest of the gold sector higher. Not at the same pace by any means. It's a 2-for-1. I mean, I think maybe even 3-for-1. The GOLD has gone up, at 3 times the pace of the other gold stocks. But I think it augurs well for the gold. One of the most interesting little nuggets that I can probably give you today, forgive the pun, is JNUG, which is the nugget, the NUGT nugget, and JNUG, the junior nugget. The JNUG has got up to about 950 this morning. It's pulled back to about 928. This thing closes firmly, or sort of it's up on the day right now. And then they're off their lows, I wouldn't necessarily dive in right here, because sometimes when the market gets into trouble, it drags the gold stocks down with it. It's kind of a weird thing, but it happens. But I think if we get any kind of a firm close, it's probably worth a shot, because I think JNUG will gap higher one of these days, in the next few days, through the 10. And I think the day it gaps through the 10, it won't be too much longer before you're 13, 14, 15. You're sort of back up pretty substantially. Now, look, there's a little bit of risk in this. I mean, we had a pretty good run up in the gold. If this market by some miracle turns around today, and it could, or there's so many. I mean, this is probably one of the hardest markets to really kind of. There's nobody out there, unless they've got inside information, can actually say for sure whether this market's going to crash or whether it's going to soar, and I mean that sincerely, because I mean, there's two arguments for Facebook. When a company like Facebook has a $120 billion crash in one day, it is a monumental event. It's the biggest thing that's ever happened to a single stock in history, and it usually doesn't happen by accident. Does it mean it's the end of Facebook? And I don't mean the end of Facebook, period, but at the end of the glory days of Facebook, or the end of an era for the time being. I.e., because the market just doesn't mark down a stock 120 billion, or what's probably now 150 billion or more, since it's gone down a lot more. Unless there's good reason. And most of the time, and though it's harder to do with the FANGs, because if you take Netflix, which had a pretty good day a couple of days ago, Netflix has had heart attacks on the downside. It's had some $50 down, $50, $100 sell-offs, and it's had some $50, $100 rallies. So what I'm trying to say is, Facebook probably, the market might kind of, the whole scenario with this market might, hold on a sec. Just a sec. The whole scenario with this market might be might revolve around Facebook, because if by some miracle Facebook was to come in with better than expected results and it gaps up $100, I mean, it would probably reverse this whole market in a nanosecond. I'll be back to you in a minute. I'm just going to take this, okay?
All right, John. Dr. Tom, be on in 4 minutes. Okay, Facebook. Currently trading 154. Trading gap, lower open, and all right, we'll get back to that. Let's get through the rest of these. I don't know how long John's going to be. On the Dow, we already talked about the S&P. Concierge Trade Alert, I just put them up on the screen for you. If you didn't get a screen grab, I'll put it up again for the end of the show. The email said to consider selling 27.97. We dropped 29 points, which is equivalent to just about $1,500 per contract. We do not get out at the swing high or swing low. No one does. It's by accident. You don't know it's a swing high
Sorry,
until after the fact. Yeah, go ahead, John.
Yeah, so so that's the story. I mean, look, Facebook and all kinds of things.
Facebook chart. Now, talk again about the dollar. What was the dollar figure you were using?
Well, it lost 120 billion with that gap, right?
Here.
The big gap, yeah.
Yeah, this is we're on daily.
Right,
okay.
right. And we're at the bottom of the range, and looking like another gap down. That's the scary part, right? In other words, I mean, if Facebook gaps down another $50 or more, forget about it. I think it'll tank the market big time. So. I think the second gap down might be the end of it, and there might be a big rally opportunity, but maybe that's overdone. But you have to look 9 times out of 10 when there's a quarterly, when there's a bad quarter, it's usually followed by 3 or 4 bad quarters or more. And Twitter is a good example of that. Twitter had a bad quarter and it's gone down an awful lot off the highs. So. When look at the gambling stocks, they topped out quite a while ago, and they've gone from 300 to 200. Win casinos. So WYNN.
Yeah, there's one right there.
Yeah, I mean, look at it. And look at the gaps on the way down. And I mean, look, to be honest with you, it kind of looks a bit like Facebook, that chart. So that's the risk, and I mean that could really blow the market. So you got to keep that in mind, because if Facebook gets clobbered, I mean it'll take Amazon down 100 or more, or maybe 200. It'll take Booking down. It'll take Netflix will probably come down, and Netflix isn't lily white. I mean, Netflix is. Somebody said they're spending billions to make millions. I mean, that's kind of what's going on with Netflix. So it's a pretty risky.
Well, they have spent an awful lot of money on creating original content.
Yeah,
And when you, I mean, and this isn't some cheap fly-by-night shot with an iPhone.
Well, look at the way it gapped.
Videos. These are high-dollar productions that they're putting together.
Right. Look, it sold off from the high. Look, it sold off from the highs. It gapped higher and sold off. That's pretty bad.
Well, they did mention in the earnings call that let's just Netflix freeloaders. They're clamping down. If you knew they had to at some point, they couldn't let it go on forever. Netflix is ditching freeloaders from subscriber forecasts after volatile stock moves. They're no longer going to include the free trial as part of the numbers. And also, I think they're going to clamp down on, right now, if you have one account, I think 3 people can be streaming a movie at the same time from different geographical locations, and that's okay per their terms of service. I think it used to actually be 5. They cut it back to 3. Eventually, they're going to have to cut that to 1 because they're like, if everybody that's watching Netflix had to pay for it, they would probably double their revenue easily, not triple. So, all right, John. It is top of the hour, so I'm going to go to Dr. Tom. Stand by, Dr. Tom. I'm going to get your mic open. Now, for those of you that don't know, Dr. Tom visits with us every Thursday at this time. And to get yourself ready, here's what you want to do. You want to go to CFRN, GOLD.com. One word. Go on, open the browser, giddy up, CFRN, gold.com. There it is. You do that while I open Dr. Tom's mic. There we are. Dr. Tom, good afternoon. Welcome to the show.
How you doing, Mr. Dwayne?
Doing very good. Cannot complain. Markets have been volatile and active, and while, you know, traditional investors, 401k, that type of thing, IRAs, it's never a good day when the market goes down because most of those are primarily long-oriented, but when you're trading intraday and when you're in the futures market, the ability to go from long to short, you know, back to long inside of an hour with no muss, no fuss, it's a good day. The only time it's not a good day in this world is when the market goes flat. And some people are probably going, well, you know, what does a flat market really look like? I'll show you. We have one right here. These are 30-minute candles, and there's 17 of them in a row. And you've got to be patient and wait for this, or you'll be one of the 9 out of 10. And I know you want to be the 1 out of 10. So that's my world. Now tell me about your world, Dr. Tom. What's going on over there?
Well, today would take a whole lot to get me down because I'm sitting here staring at my brand new 55-inch monitor.
Ooh-wee.
I've been thinking about this for a long time, and I finally bit the bullet, and it got installed and everything, and boy, does my computer look good on this.
Now, what kind did you get?
I got a Samsung. Did a lot of research on it, and I usually buy Sony's, but most of the people I talked to told me about the Samsung.
Hey, John, Dr. Tom's on, so you're welcome to hang out and chat with us if you'd like. If you want to pop back on, either way you want to do it, it's fine. But
well, just say hello, Tom.
Hello, John. How are you doing?
Pretty good. You got a great voice there, Tom. It's always good to hear your voice.
Thank you.
I was just commenting earlier for the benefit of everybody, and maybe you didn't hear it, but you know, this huge deal where Rand Gold has acquired American Barrick to make the biggest gold company in the world has been a spectacular deal so far in terms of leading the way higher in the gold stocks. You know, the rest of the gold stocks are sort of struggling to go higher. They haven't gotten out of the starting gate really yet. And there's a little bit of risk because sometimes they knock the gold down in November, as you're probably aware, and that could still happen. But on the contrary, you know, if we suddenly have a bit of an updraft here in the next few days, or going into the end of the month, and we have a decent close by the end of the month on the metals, the lows may definitely be behind us, and I would think we'd start to see upside of monumental proportions. As a matter of fact, I put together a piece. We've been talking about going into the 20s and what awaits us in the early 20s in terms of some sort of a catastrophic development. About a week ago, Art Cashin, who's a well-known commentator on Wall Street, put out something that startled me, actually. He said, when the Dow went down 800, he said that's one thing, but here's a bigger problem. And out of the blue, he started talking about this Weimar Republic that happened from 1919 to 1923. Correct. And we've had a few preludes or precursors to the same thing happening in this era, i.e. Venezuela, Zimbabwe, etc., Iran, and so we've had the warning shots. But what I think is coming, it's interesting that he came out with this, because he explains in this article how this whole Weimar thing happened, and it happened because of an overconfident Fed who did a great job with the economy all through the second decade of the 20th century, and they thought they could do the QE again in the 20s, and so they started pumping up the economy in Germany because it was faltering, and they created this hyperinflation, which was the Weimar Republic, and it's almost an exact replica of what's going on today with an overconfident Fed, where you got people like Janet Reno saying, well, we're so confident we can control, prevent downturns, and the Fed should be doing more in the next downturn and buying equities and things like that. You can almost foretell of a similar scenario coming in the early 20s, where they're probably trying to perpetuate what's going on right now, and the economy runs out of gas, and they create a hyperinflationary event, which you and I both believe is probably going to result in an $8,000 or $9,000 gold price. So,
in fact, Tom, that was your opening topic a couple of weeks ago. Could hyperinflation come to the U.S.? I think you're a couple weeks ahead of Art Cashin on that one.
Exactly, and we all are. Remember we talked about it the last time.
Yes. Mm-hmm.
Yes. Yeah. The fact is that almost every nation in the world has at some time experienced hyperinflation, but the really remarkable thing to me is that the average lifespan of a currency, a paper currency backed by nothing, is only 27 years. So the likelihood of it happening again, I think, is high.
We're overdue.
Yeah, especially if they do what you just said, John. Like if the Fed starts buying equities, how well did that work out for Japan back when they were in hyperinflation and they started buying up equities? They killed their own stock market.
Right, and it's kind of like the Chinese. This thing, I don't know whether you noticed it a couple of days ago, the Chinese come out with a hidden, it's like Enron. I'm telling you, it is just like Enron. China is like a giant Enron, where they've been doing off-balance, off-market transactions. Turns out they got $6 trillion that nobody knew about in debt, right?
Right.
And of course, because the Chinese, listen, you got to give them their credit. The planned, what they've done, because they have the autocracy, the authority, and the power. Why wouldn't they have 9% average growth for the last 30 years if they've been pumping up the economy with $6 trillion off market, right? That's just come to light. So the point is, though, when you look at the Shanghai Composite chart, it's scary, because it's actually looking worse than the Japanese market did in 1979. Why? Because you got two peaks. You had a first peak in 2008, then a crash, and then a pump up, and the second crash, and now we're making new lows off this Chinese market. and it doesn't look very good at all for the Chinese for the foreseeable future. And so the only way out for the Chinese is devaluation of the yuan. You got 1.4 billion people who are 10% poorer than they were 6 months ago. You know, and then 2/3 of them want to live in the UK, Ireland, US, or Canada, so they're getting their money out of the country, which is further weakening the yuan. And then the outlook for China looks diabolical, because if the yuan goes down another 10%, the panic starts where 1.4 billion people are going to start buying gold at the same time.
Well, actually, right now, China is the biggest gold market. It used to be the biggest gold show every year was in Orlando, and it was called the Fun Show, the Florida United Numismatists, and you'd have maybe 12,000 people come to that every year. That was a big show. Today, the biggest gold show is in Beijing, and upwards of 250,000 people attended. So they have become the biggest gold bugs in the world.
Well, you know what I think could happen? It's interesting because, you know, most of the gold bugs out there think that China has been downplaying its gold holdings. You know, they've been understating their gold holdings, and currently there are 1823 tons, you know, which has jumped from about 600 tons in the last decade to where they are today. And the last time they did an update was, I think, in 2016, and we were at the bottom. And I don't think they wanted to, they announced about a 200-ton purchase, and they probably didn't want to announce any more than that, because remember, back in 2016 we were at the lows, and they didn't want to end up with egg all over their face if the market went lower, right? Because everybody knows they've been buying all the gold in the world.
Right.
But what I think could really move the market in the next few months, possibly, is if India came out and announced a purchase of 200 tons like they did maybe in 2010 to 11, that kicked off the run up to 1900, or Chinese came out and said we're over 2200 or we're 2500 or something. I'm telling you, you can almost guarantee a 100-ton purchase. I mean, even if Russia announced a 100-ton purchase, I think gold would go up $100 overnight.
Easy.
So any country announces anything like 100 tons or a couple of 100 tons, you can say that's a $100 move or a $200 move. And once that genie's out of the bottle and people really remember, you suddenly wake up to the fact that there's a couple of big elephants in the room that have been there all along, you know, throughout this whole pullback, they're going to start getting the memo. And all these guys who are in stocks up to their eyeballs right now are going to start thinking, you know, I think it's time to get into gold. And when that happens, that's when you're, and you listen, we've seen what happened to Bitcoin. We saw Bitcoin going from 1,000 to 20. Gold could easily go from 1,200 to 8 or 9, you know, in a kind of a, because what I've been saying about we're ready for the second surge, just like the 1980s, we haven't had it yet. That takes us, you know, if think about this, if the run up to 1900 is the run up to 274, then we had the pullback to 76 and the run up to 875. You know, apply that to the current chart, which is elongated, admittedly, right? It's a 7-year cycle up from now, and you come up with numbers that are pretty much, you know, 8, 9, 10,000, something like that. And it's not unbelievable because we've seen it before. You know, it's not the end of the world. You know, whether we get, I mean, I'd say if we get a mild inflation, a mild or, you know, like, remember, inflation only went to about 12% to go from $100 to $875 gold. Did the world change that much? I mean, actually, right after that happened, you know, the world had a 20-year bull market. So, you know, we might be in for a lot of volatility in the next decade, for a few years, where the market could tank and gold could soar, and then we get a reset, and we probably start another 10-year bull run into the 1930s, into the 2030s rather, just like we did in the, you know, in the Roaring 20s kind of thing. Could happen again, and
Were you alive back then?
Say again, sorry.
Were you alive in the Roaring 20 during the Roaring 20s?
No, but my father was, and he, God bless his soul, rest in peace. He actually bought in July of 1932. He bought right at the bottom of the Depression.
Whoa.
And that kept us going all our lives. He managed to. We lived off the market all our lives thanks to his instincts.
Bless his heart.
Wow.
Yeah.
But you've been talking a lot about the technicals on the gold, but back to China for a second on the fundamentals. As you well know, India for decades was the biggest net importer of gold, and China several years ago took over that position. They're importing more gold than anybody. South Africa was the biggest producer of gold. China is now the biggest producer of gold. But a few years ago, I saw an article in the journal. This investigative journalist found out that what they've been reporting to the World Bank and the IMF as far as their holdings, they've been greatly understating them, partly on what you were talking about, buys that they just didn't report. They've kept them off book, but also they've been going back and using technology to go back to their tailings from their gold mines and producing more gold from that, and that's not even required to be reported.
Interesting. No, yeah, I totally.
That's not required.
I mean,
what they pull out of tailings is not required to be reported.
Right. It's not considered normal production. It's I can't remember the technical stuff on it, but there's a lot of different technology out there to turn the tailings into some degree of actual bullion. Some are more successful than others, obviously.
And some are more expensive than others. And the higher the price of gold, the more money you can spend to try to extract more gold. So.
Right. It's sort of like the fracking of the gold world.
Yeah. I suppose.
So, well, I think, China is the key. The cat's out of the bag. One of these days, something big is going to come out of China because, look, they're not only buying all the gold in the world and tightening the market in the process. I mean, why are all the commercials long up to their eyeballs like never before? Because they must know that the market's getting really tight, and they're hedging their future purchases. That's what they're doing. And when that kicks in earnest, and the Chinese are buying all the gold that they can get their hands on, plus all their own production is staying in China. It's just satisfying the demand. And I mean, you've seen those pictures of 10,000 people in a line waiting to buy gold when the last time it ran up to 1900. Remember that?
Yes.
When this gold fever hits the world, back in 1979, it was on the news every night. The gold went up another $10, back then. And just like, when it becomes a sort of a mainstream thing, and we are, I mean, look, I call it the trifecta. The output is slated to decline by 50% over the next 5 years or so. That's what everybody thinks, the forecast, because the low-hanging fruit is gone. To give you an idea, back in the 2000s, it took 6 million tons of ore to create 1 million ounces of gold, right?
On average?
So something like that. Now it's taking 6 times that or 5 times that to do the same. In other words, so the yield...
I'm sorry, you dropped out a little bit there. How much was it taken to produce a ton?
I think 6 million tons of ore to produce a certain tonnage. Whatever it is, it's taking 6 times the amount of ore today or 5 times the amount of ore today to get the same gold as 15 years ago.
Have you heard any solid figures on the cost of production per ounce of gold today?
Look, I think there's been some improvement, some cost cutting. It's probably between 9 and 1100, maybe, because a lot of these mines are barely profitable here at 1200. And that's one of the reasons why they've been knocked down a lot. Where the difference is really going to kick in terms of for stocks is, if we start adding $100 or $200 to the price, these gold stocks will go berserk, because the profitability, I mean, it's basically every what people don't realize is that every single dollar of price is a net profit, because the costs are fixed. So when the gold starts going up, it goes straight to the bottom line. And that means that gold stocks are extremely highly leveraged to the price once a decent run starts running, starts going higher. And that's a lot of people don't realize that, because they're a lot more highly leveraged than regular stocks are,
Now,
so,
here's an interesting $1,200 price tag on gold has been widely accepted but questioned by investors for some time. Most of the controversy boils down to how gold mining companies report on their financial statements. In the 90s, mining companies picked up the habit of reporting cash costs on their financial statements, a non-GAAP, non-IFRS measure that combines the cost of mining gold, the cost of complying, bringing gold to market, and the cost for selling it. All of that was bundled together. However, cash costs ignore the expenses associated with sustaining capital equipment, as well as general and administrative costs. So the real cost of production remains uncertain. There's 8 stages. Well, we'll get it out. We'll really talk about that later. But so, what was the number you came up with, John? You were at 1,100.
Yeah, somewhere between 9 and 1,100.
And I think it's going to vary from mine to mine depending upon the quality.
I mean, look, there's very few gold miners that are doing better than $600 per ounce right now. Or even better than the 7 or 8. I mean, it's just maybe even 8 may be the low end. There's a few high grade mines that might be doing okay, but it's a pretty hard struggle for these big miners today. And that's one of the reasons why the stocks have gotten knocked down so much. So, but for sure, I'm telling you, a couple of $100 move. If we get up to 15, 60, and 100, these gold stocks are going to they'll be double or triple where they are right now. I mean, a lot of them, they'll be substantially higher than where they are right now. I mean, how bad is it? Look. Take a look at the XAU and these gold indices. They're. I mean, it's crazy. We're at $1,200. We're 5 times higher in price today than where we were in 2001, right? And yet the gold stock indices are at the same level as they were in 2001. So what that tells you is, even though the gold price is 5 times higher, the cost of production has gone up. At a rate where the 5 times higher price doesn't make that much difference in today's world.
Yeah, one of the things that sometimes is left out of the calculation is the cost of exploration. Buying leases, dead leases that don't work out, and so on. I used to be in the oil drilling business, and when you figured our cost to produce a barrel of oil. If you just talked about your drilling and production cost and pumping cost and so on, that's one thing. But if you factor in what it took to get to the place where you could put a bit in the ground, that raised the price per barrel quite a bit. And that's also true with gold.
And I mean, the trouble with oil is, a dry hole. You lose all your money. There was a crazy situation. It's called U.S. Energy. This company actually had a pretty good break with uranium or something, and made a few $100 million. Kind of went to their head, and then they started doing some crazy drilling into joint ventures. And I mean, they lost $10 million on one hole just like that. I mean, it was a dry hole. I mean, listen, in today's world, I mean, look. I'm not saying, there's always risk in any hole you drill, but there's a lot of holes you can drill in the oil and in all over America where you're not going to get a dry hole. So if you're stupid enough to drill to get a dry hole, in today's world, in the world's largest oil producing country as we are today, you're not doing your homework.
So technology is available to.
Yeah, the technology is.
Why did this? What happened?
Well,
to this
I think they were. I think they. You know. They, I mean, look, it was in Louisiana, which normally, you know, you would think would be a winner, but they miscalculated. You know, they made a big miscalculation, and it just. But there's a lot of risk. And listen, you know, the big companies, they're a little bit scared of the deep ocean now, because the deep ocean's a lot more difficult. The rewards are phenomenal in the deep ocean, like the Gulf, because if you hit a big one, you know, you got $1 billion, you have a 1 billion barrel discovery, you know, that's huge. But there's been plenty of misses, you know, in the Gulf, and that's one of the reasons why you know, literally about $1 trillion worth of discovery, you know, new development, if you like, has been shelved over the last few years, to the point that we're almost for sure going to have another oil shock in the early 20s. And I think that's another reason why gold's going to go through the roof when that happens.
Well, I brought up oil just as an example as far as gold is concerned, but what I was really trying to get to is there are a lot of cost in exploration and buying leases, you know, getting leases, starting to dig, and you know, basically like a dry hole again. And I think that's factored in. And when you factor it all in, then I think the $1,200 figure, if you include everything, is probably solid, because look what happens. Every time it drops below 1,200 for any length of time, you start to see mines shutting down production. They just close down and say, okay, take it off for a while. That's a good indicator to me of the real price of production. And the other thing it does is when they shut down for a while, it also decreases supply and pushes price back up. But if you watch carefully, you'll see that happening. That's not going to happen in all countries, because, as Dwayne was saying, the price of production is different in different countries. The more developed a country is, the higher their compliance costs are, because there's a lot of chemicals used in the production of gold. And so if it's a third world country, it's going to be cheaper to produce. And if it's produced in the United States, compliance costs are going to be through the roof.
Right.
This is an interesting statistic. Despite having just the 9th largest known gold reserves, a little more than 3% of the global supply, China produces 12 to 15% of all the world's new gold each year.
Yeah, they're the biggest producer now, China, in the world. And it's crazy, you know, what a lot of people haven't realized is that South Africa used to produce about 1,000 tons a year, and they're only producing about 150 now or something like that. It's just a catastrophic drop in output, and it's changed the whole equation in the world. Gold, you know, I mean, they're still in a downtrend. They're actually producing less and less each year, and one of the few countries actually producing more is China. It's kind of amazing.
You know, a lot of that in South Africa is political. I mean, they're just so messed up over there that they can't be efficient at anything.
Right. No, I agree with you. So, listen, I'm probably going to have to duck out, right, but it was good to talk to you, Tom, and thanks for the invite, Dwayne.
Same here, John.
Have a great day.
All the best. You too.
Well, overall, since you and I last spoke, the markets have taken a pretty nice decline. Gold, on the other hand, has had a bump of late. What are your thoughts at large?
Well, I'm seeing the same kind of things happening with the stock market that I saw prior to October 1987 and really? Prior to the 2000 crash and prior to 2008. I'm not talking about technical things as such. I guess they are technical in a way, but I call them cracks. You know, it's my little word for it, cracks in the foundation. Mm-hmm. When I start seeing big drops, and then recoveries. I wrote an article about this the other day, by the way. I talked about the dead cat bounce last Friday, and I put a disclaimer at the end. I said no cats were harmed in the writing of this article.
Yeah, you got to do that, otherwise PETA will be knocking on your door.
Yeah, I knew somebody would be giving me a hard time. I did get some nasty emails, but when you start seeing that kind of a pattern, the market going up and everything's looking strong, and then it takes a big drop, people start to lose confidence. The people that come back in are the people like John's father, who realize, hey, let's buy it at lows. But eventually, even they don't come back in, and then you see things happen like happened in '87. I was on the phone as a stockbroker that day, October 19th. I'll never forget it. I remember that as good as I do my anniversary. And all day long, hundreds of people were calling me, crying, screaming, cursing, just totally distraught. Right. 22.6% drop in one day. That's a quarter of the Dow in one day. And so I see that coming. I'm not like a lot of people think, we do have a great economy. But if you go back and you look at the economy versus the stock market throughout time, you'll find lots of times that the economy and the stock market are tracking together. And you find just as many times when they're inversely proportional. Yeah. Mm-hmm. So it's a mistake to think that because the economy is doing well, the stock market's going to do well. I actually wrote an article, I addressed an open letter to President Trump, and I said, look, you're taking credit for the stock market. That's a mistake. Take credit for the things that a president can affect, like jobs, the lowest unemployment. We now have more jobs available than we had people looking for work. How long has that happened? Take credit for lowering taxes. Take credit for reducing regulation. Take credit for new businesses and new factories, record numbers of startups. All of that is stuff the president can affect. The president can affect the stock market. The Fed can, temporarily. But I said, President Trump, if you take credit for this up market, when it crashes, you're also going to have to own that. And that could be disastrous.
Yeah, right. Well, I mean, there's no doubt that he, has played his role, and probably the tax breaks were one of the largest contributing factors, I would think. This move is extended this overall market, and I know we've been saying that for a long time. How high can it go? Well, it will continue to go higher over time, because the S&P 500, unlike gold, which there's a finite supply of gold. When God created the heavens and the earth, he put a certain amount of gold in the belly of the earth, and then he shut down production, closed the factory, shut it.
That's right.
That's it. That's all there is. But the S&P 500, it's 500 individual companies, and as soon as one of them gets weak, starts to lag behind, well,
swap it out.
Curb. GE, of all companies, I mean, they were the ones most recently exiled from the Dow, if I'm not mistaken. I'm trying to remember who took their place. But so because both the Dow and the S&P, best of breed indexes, you have to qualify to get in, and the weak are taken out. So over time, it's always going to move higher. And so that everyone should hear that. I mean, yes, there are going to be ups and downs in the market. That's just the nature of the market. But overall, the nature of the market, the way we have structured it today and the rules we've set for it today, over time, if you could only pick one position, that would have to be long. The same, of course, applies to gold because of the fact there's a finite supply. S&P 500, there's an infinite supply. And I've talked about this a lot in the past, and sometimes people don't want to hear that. We get crop reports that tell us, how much soybean has been planted and what the expected yield is, and numbers come in for the new crop. And as the chart shows us, soybeans react according to supply and demand. Gold, supply and demand. S&P 500, there's really no supply and demand issue. There's a demand issue, but there's no supply issue. Because there is when we rolled forward to the December S&P 500 E-mini, it wasn't accompanied by anything like, okay, we're rolling forward to the December S&P 500 E-mini contract, and it looks like this season, this contract, we have 1 billion. There were 1 billion contracts. Now, last contract we had $1.5 billion, but this time they only made $1 billion. Price would jump, but that's supply and demand. There's sometimes there's demand and lack of demand, but supply is not even a question. And no one ever seems to think about that. Now, with investment grade gold, in particular, there is a finite supply. Our new discoveries
even more so than gold.
I'm sorry, go ahead.
Even much more so than gold itself. I mean, you mentioned about a finite supply of gold. They've calculated that all the gold has ever been produced, and all the gold, throughout history, and all the gold that's currently in the ground that they know of would fit in a cube 30 meters square. So that's pretty small when you consider the whole entire world. But
I've heard Olympic swimming pool as used in that analogy, and I've heard tennis courts, but I don't recall.
Well, I've confirmed the Olympic swimming pool, 2 Olympic-sized swimming pools. Of course, Olympic pools are very large, but all the gold would fit in 2 Olympic-sized swimming pools, and also the 30 meters square. And 30 meters is like 2 of those 18-wheelers with the tandem trailers behind them, end on end. At least that's the graphic I've seen. So that's a lot, but it's still tiny when you consider the entire world and 7 billion people. But investor grade gold is 100 times more rare than gold is, and that's why it's made so much more. I think 140-year period, I calculated the investor grade gold's return was 8 times the return of gold bullion. So, which kind of leads us into what I wanted to talk about today.
Okay,
is how gold bullion is priced. And by the way, folks, Dwayne has up on your screen there the CFRN gold. He didn't just put that up there for fun. If you go there and fill out the little form, you will get the Gold Education Starter Package, which includes some I don't want to say insightful articles because I wrote one of them, and that would be like bragging rights.
Go ahead, it's all right.
Okay, well, at least one of them is very insightful. It's called Golden Art. The other one, I'll let you be the judge. It's called the 10-10-10 Financial Survival Plan. It's how to survive the kind of crash that John and I were talking about at the top of the hour. And there's some good videos there. So take a minute, as soon as the show gets over, go to CFRN Gold, easy to remember, and order that. There's no obligation. We will enroll you for our webinars, which happen every Monday night, and we'll send you notices for them. But you won't get spammed. If you decide you don't want to get the notices anymore, we'll take you off the list. I don't make anything by sending emails out to people that don't want them. So let's talk about the price of bullion. People think that price and value are the same. And in some things, that's true. when it comes to gold bullion, silver bullion, really any kind of bullion, platinum, that's not true. The price is based, it's going to rise and fall depending on the currency it's priced in. The value is what it will buy, and they can be two different things entirely. If there was a real price of gold worldwide, then the chart I'm looking at right now, it's a gold percentage annual change in U.S. dollars, Australian dollars, Canadian dollars, Swiss francs, the euros, British pounds, the Japanese yen, and so on. It would go up in each of these currencies and down in each of these currencies pretty much at the same time and pretty much the same proportion. But I'm looking at one line here where 1 year where half of those countries gold was going down year over year and half of them is going up. Well, what's up with that? Then I'm looking at 1 year, this is 2008, where gold was down 14.4% in Japan, and at the same time in Great Britain, it was up 43.2%. Now that just sounds crazy, doesn't it?
Yeah, it does.
But it's based on the economies of those countries. The price of gold is based on how the currency is doing. So if the currency is strong, as it will be in any country at some point, then the price of gold will change. And if it's weak, then it'll change to the positive. Why? Because it takes more dollars or more yen to buy the same ounces of gold. So once you get that principle, once you understand that gold is not a commodity. I mean, I see commentators, these talking heads on TV trying to lump gold and silver in with other commodities. In general, most commodities track the same, right? Dwayne, you trade commodities, right? Mm-hmm. In general, don't they tend to go up and down about the same?
Do they channel back and forth? Yes.
Yeah, but if you break out precious metals from the rest of commodities, it's again like we were talking about before, where the economy and the stock market sometimes track and sometimes they don't. Sometimes gold and silver will go up and down with the commodities in general, but other times, if you're just taking precious metals index against a general commodities index, sans precious metals, you'll see them go in widely divergent directions. That's because of what we're talking about here. It's not based on the typical commodity measurements. It's based on the currency that is being priced in. So if you understand that, then you'll understand why, you know, the example I gave, I think one time here, how 100 years ago, a house that cost $4,000 cost 200 ounces of gold. And that was 100 years ago. Today, that same house still costs 200 ounces of gold, but it costs $250,000. What's up with that? Well, the value of gold didn't change. It bought a 3.2 100 years ago, buys a 3.2 today, but its price certainly changed. And the same thing with the house, okay? It's still the same thing. It's just a house. It's got 3 bedrooms, 2 baths, typical house lot, you know, nothing fancy, just an ordinary 3.2. And it keeps the rain off your head and it keeps the sand from blowing into your living room. So is it worth 60 times as much as a house 100 years ago? Absolutely not. Its value hadn't changed, but its price changed dramatically. But if you put that same $4,000 in a wide basket of stocks, it didn't grow to $250,000. It grew to about $83,000. So what does that say? It's that hard assets as a long-term investment protect you against inflation. Now, if you then extrapolate that to the rare coins, the investment grade gold, they made far, far more than bullion gold or real estate. both of which are good hard assets. In the same period of time, they went up to about $2 million, not $250,000. Does that make sense?
It does make sense. And that the first time you explained that, you not only talked about the value of a house, but I think you threw in what a blacksmith made, or the weekly earnings or wages.
Correct.
You connected those dots too. That's really stuck with me.
Yeah, the price of a men's suit, the cost of a Mustang, all of these things, even a loaf of bread for thousands of years in gold has stayed pretty much the same. But you do get volatility in gold price. I mean, we all remember gold at 1900, and then we've seen it below 1100. So usually about 1 year in 10, gold will drop year over year. From 2000 to 2012, it was up every year, and I was widely predicting a drop in 2013. And not that I'm a great prognosticator, it's just I saw this same kind of cracks developing in the gold foundation, and it dropped, I think it was 32% that year, and silver dropped 49%. So gold does drop, usually in response to the dollar strengthening, but investor grade gold is boring. It just goes up.
Yeah, well, I know a lot of people that would probably be willing to settle for some of that boredom.
Yeah,
just a little.
I mean, it doesn't go up as much as some of the things you invest in. I mean, you probably make a lot better return than like 10 to 15% a year on futures. But remember, sometimes the investor grade gold goes up far more than that because of its rarity and because of the general numismatic market recognizing that certain things are more rare than they had thought they were. They can also take some big jumps. We saw some coins go up 30 and 40% in 1 year. But I always go by 4 principles. And this is when people call me, they say, well, they call me, usually they call to buy bullion. And I say, well, let me teach you 4 principles, and then we can go on. The first one is cash is trash. Well, I don't have to spend much time on that because most of the times people are calling me because they know that cash is trash and that inflation is destroying the value of their money and their retirement and their children's college plan, even their pension. Second principle is bullion is better. Well, if I can break even with inflation, is that better than being destroyed by inflation? Sure. So bullion is better than cash, but it's not great because, as I said, bullion is not an investment. It only goes up as inflation is going up, and so it's protection. Think of bullion as an insurance policy. Did your house burn down last year, Dwayne?
Thank God it did not.
Well, that's good. Did you have fire insurance?
I did.
And did you call the insurance company up January 1st to say, look, my house didn't burn down this year. I'd like to get a return on my premiums. They would do the same thing, right? They'd chuckle.
Yeah, well, they would, because they'd go, well, sir, the product worked flawlessly.
That's a good one. You had fire insurance and you didn't have a fire. Right. But, that's a premium. Everybody understands they're paying a premium when they're getting insurance. It's not an investment. Well, when you buy bullion, think of it that way. Unless you're a trader, if you really know how to trade gold, you can buy it and sell it, and you can make some money. But the best way to play gold is buy investment grade gold. And that's the third principle, because since bullion is just an insurance policy, the third principle is investment grade gold grows. I gave you a couple of examples of that. Mm-hmm. It grows in real value. It grows in purchasing power. I don't care how many zeros they put behind a number. If I can't buy more stuff with it, if let's just do a ridiculous example. Let's say that one widget buys a car, and then the value of widgets goes down, and so now it takes 100,000 widgets to buy that same car. were widgets a good investment? No. So investor grade gold grows in real value.
But a car is always nice to have.
Well, yeah, especially if it's a Mustang, you know, or better yet, a Jaguar.
Well, no, let's keep the Mustang. Let's drive it wearing a man's suit to our home.
Okay.
There's something there. I'll have to stitch it together, connect the dots. But yeah, go ahead.
Okay. Principle 4. You know, investment grade gold grows is principle 3. 4 is European investment grade gold rules. Okay. And it's a little takeoff on the fact that a lot of European countries either now have or once had monarchies. And so a lot of the coins, the rare coins from hundreds or even thousands of years ago, have the pictures of monarchs on them. So why is European investment grade gold better than American? We tend to be kind of parochial in this country. We think that everything American is better, just like Texans think that everything Texas is better. And in general, that's true. But it's not true about American investment grade coins. They have been the big dog over the last 40 years. They've risen about 10 times as much as the European investment grade coins. Every year for the last 100 years, both European and American coins have gone up every year. Now, when I say you haven't had one down year, I'm talking about the high grade ones, not a cheap coin that they call numismatic, but it's just minimally rare. I'm talking about the really rare stuff, the really high quality stuff. But why have the U.S. coins gone up 10 times as much as Europe's? Well, it's because they started slabbing their coins. I wish I could show you a picture, but that's hard to do on the radio. But if you go to look up PCGS.com or NGCcoin.com, you'll see about how these two major companies that grade about 95% of the coins in all the world go about it. And it's PCGS.
PCGS. Let's try that.
And you'll see a picture of a slab. That's what revolutionized the U.S. coin market, caused it to go up so much, far, far more than any other world coins. But the next best were the European coins. So
here's the slabs.
Yes. Okay. And you see that inside they're sealed, hermetically sealed, because you see some toning there on the silver coins. It stops that because no air can get to the coin, no humidity or whatever. But they're also ballistic plastic, very hard to open up. And the grade is inside there, and on the back there is a hologram to be able to, it's a security feature. So anyway, the point is, when we started grading coins by third parties, like has happened for the last 40 years in the United States, it caused the U.S. coin market just to soar. But it's pretty much peaked now. And the market tends to go up now as gold and silver are going up, but not a whole lot more. So that's why there's a real huge arbitrage opportunity. We're buying coins 10 cents on the dollar in Europe. It's like if you bought a stock on the Amex for $32.50 and you bought a whole bunch of them and sold them on the New York for $32.55, that's arbitrage, right? And you'd say, yes, you know, I just made $100,000. Well, this is a different kind of arbitrage. It's a timed arbitrage. But if you buy European coins, the best experts are saying within the next 5 to 6 years, they will make the kind of runs that the U.S. coins made in 40 years. Now, why would that be? Well, there's a lot of factors that go into it, but the biggest is that when we first started grading coins here in the United States, it was with an 8-point grading system. It wasn't because a better one wasn't available. It had been invented earlier, but it just wasn't in use. People thought it was too complicated. So we started with the 8-point grading system. Then we went eventually to a 20-point grading system. And each time we did this, coins exploded some more. Finally, we ended up on the current Sheldon scale with 70-point grading system. And that's why the US coins are worth so much more than the European ones, because you're able to differentiate fine gradations in the grading. So they're just now starting, the last few years, PCGS and NGC have opened up offices over there, and they've just started grading investor grade coins in Europe. And we're going to see the same kind of runs there that we've seen here, because the only difference, well, the only significant difference between US and European coins is the fact that 98% of US coins are graded and 98% of European coins aren't. So we buy them ungraded, we bring them over here and get them graded by some of the finest experts there are, and then we sit and we watch them go up. All right. There's other factors though. One is the fact that, you know, if you're a coin person, US coins are kind of boring because we only had a few designs and not too many of them were very good looking. Matter of fact, our $20 coin was so ugly that one of the presidents hired a guy named St. Gaudens. You've heard of the St. Gaudens $20 coins?
Yeah, those are pretty popular. I mean, yes, I've heard
yeah.
of them.
Well, his name was Augustus St. Gaudens. I can't remember which president it was, but anyway, he said our coins are just so pug ugly. He hired a sculptor to sculpt Lady Liberty, and that's what they switched the coins to. But in general, when I say that US coins are boring, we don't have a lot of different series, we don't have a lot of different designs, whereas Europe has hundreds of different series, hundreds of different designs, all kinds of denominations. So it's just rich, fertile ground. So we'll probably see European coins supersede the price of US coins. But frankly, since I'm buying them at 10 cents on the dollar now, if they just caught up to US coins and did nothing more, I would make a whole bunch of money. So that's what I'm concentrating on, the arbitrage opportunity.
And in seeking out that opportunity, are we talking coin shops? Are we talking estate sales? Being part of some connected network where, how does a person participate?
Well, Golden Art has buyers all over the world, and occasionally we'll find something at a coin shop, but that's like finding something valuable at a yard sale. The coin stores tend to have the low-end coins because they have walk-in traffic. They're not going to have the true great rarities. Like I say, occasionally one of our buyers will see something that the coin dealer didn't realize he had. Much more fertile ground is going to private sales and buying the coins from people who have no clue what they've got because they're ungraded. And like our head buyer, Greg, he's been doing this 40 years. He's one of the top experts in miracle coins in the world. And he'll see a coin that maybe the owner thinks is a low-end mint state coin, which means uncirculated. Maybe they think it's a 60. He looks at it and he realizes that it's a 63, and that if he buys it as a 60 and gets it graded as a 63, he just made 20%. You know, so
from
there's
a 60
that.
to a 63, it's a 20% difference in value.
It all depends on the coin. But yeah, it could be that. It could be a lot more. There was an article in the Wall Street Journal, and this was about U.S. coins, and it was a one particular year of coins. It was a $20 double eagle, as it's called, and there was one that was graded MS62, mint state 62 or uncirculated, and it was I think it was $5,000, and then there was another graded 65, and it was almost $25,000. So my first thought would be, well, they probably came from different mints, because the Philadelphia Mint was the biggest mint, produced the most coins. Some of the smaller mints, like the Denver Mint, San Francisco Mint, and so on, produced far fewer coins, and so therefore they're more rare. Well, that wasn't the case. Well, maybe it's the difference in the grading. Well, that's obvious. I mean, 162, 165, but that shouldn't account for a 500% increase. Okay, usually it's going to be, like I mentioned, 20, 30% increase with a 3-point difference. In this case, it was something that's called the term slips my mind, but basically it's a certain type of rarity, and
like
it's
a misprint or something, or
no, I don't know why my mind usually doesn't blank on me like this, but it's called condition rarity.
Condition rarity, okay.
It turns out,
Which is,
when I did the research on it, that there were several hundred of that year coins graded in 62, but there was less than a dozen graded in 65. So the coin wasn't any more rare, one than the other, but it was more rare in that grade, and that was why it was worth almost 5 times as much.
wow.
So there's a lot of factors that go into it, and that's why you need a company like Golden Art to buy you the right coins. And I've got to run, but to finish your question, we do buy sometimes, very rarely, from coin stores. We do a lot of private sales. We go to some auctions, coin shows, of course, the old standby. But what's been happening more and more, since we're getting a worldwide reputation for buying the best investment grade coins, now people are coming to us and offering them to us. Dealers that they don't have clients for these particular coins, and they know we do. So instead of us having to spend, like Greg used to drive, average 1,800 miles a week in Europe, driving all over the place trying to buy coins, now he sits back in his office a lot of the time and people bring him coins. We're become the go-to guys for investment grade gold.
Now, that's interesting, what you just said.
Excuse me, I am actually a couple of minutes late for a webinar I'm supposed to be on.
Oh, well.
And so I do need to beat feet here. But thank you for the opportunity for being on, and I'll see you next week.
Yeah, I wanted to show you. I'll send you the. Oh, there you go. Where opportunity finds you. That's what's happening with Golden Art, because you're so well known now. So congratulations. Thanks for your time today, and I'll talk to you.
Thank you very much.
All right.
Okay.
Golden Art, where opportunity finds you. I like it. Run with it.
Make sure you get the Gold Education Starter Package, folks.
Got to go to CFRNgold.com. Dr. Tom, thanks so much for spending time with us today, and we look forward to seeing you again next week. And he's gone into the night. Oh, make sure his mic's closed. Make sure John's mic hanging over. He must have got the mute button. They're very good. Okay. This is a weekly chart of gold. Stretching back to 2016. With a high up around 1378. 1377.50 at a low 1124.30. Back to the S&P. Continued to drop, so this number has changed, of course. Now we're at the 63-64 weekly trading zone, consolidating, which is what we would expect when we get to a zone. Consolidate, we get rejected, or slice through it. It's one of the three. Very few absolutes in the market, but one of those three will happen. Did we get the Dow covered? 25,470. Yep, 170 point drop, which has continued. Now this is if this zone holds, which it's, the buyers really are giving it a shot here. If it does hold, then we'll head back up to this zone overhead. Now we overshot the zone here. This is an area to just keep your eye on. If you trade it down, this whole area right across here. Now, if we rally up out of this zone, I would pay particular attention to this right here. Last night's Concierge Trade Alert to consider selling 25,470. We already caught one bounce off the zone. Now that doesn't, it's a 30-minute chart, so it's like, well, your eye might not even detect it as a bounce. That is a leg and a retracement, a leg and a retracement. So we're getting a retrace right here, right now. We're only back to the high of the previous candle. Nope, a little bit above it. To all the world, it looks like we're turning here. Even more so. So, as an example, on the L2 on the Dow, I put out an alert to consider selling 25,190 to 25,130. But the market's rallying. There's a method to the madness. Sometimes things look so obvious that, think of it like this. You're out on a fishing boat. Everybody's fishing off the port side, and you're fishing off the starboard side. You catch a fish. What happens? You know, the boat is listing because everybody's over here. You catch a little goldfish, a little guppy. Everybody runs to your side to get their hook in that water, because that's probably the right water for catching fish. Now this rally looks pretty strong and pretty stout, and I'm not saying that it isn't. All of that and more, and that it could be the beginning of the run to put in new highs for the week. It can be all that and more. When prices rise, it takes financial commitment. Now, think about what I'm saying. It takes financial commitment for prices to rise. In order for prices to decline, these guys here that are running this up, all they have to do is not make a financial commitment. The opposite, in fact. All they have to do is stop buying. If they stop buying, price will deteriorate. And we've seen that prices can fall often a lot faster, but then they rally. Gravity kicks in and there it goes. because everyone just rushed to the other side of the boat. I'm thinking, yeah, what's the chance I caught the only fish in the ocean? Well, that's going to then send everybody running back to the other side. Have you ever been whipsawed in a trade? Maybe in the early days of trading futures, you were getting in those really tiny time frames, and man, you just get whipped back and forth and back and forth. Think about this. There was always someone on the other side of that trade, right? Now, I'm not going down the, somebody's got to lose if somebody wins. I don't want to have that argument today. We've talked about it, we've written about it. I just don't agree with the commonly held misconception about the market in that, what I just said. Plus, I don't use winning and losing. You come to work, you expect to earn. Otherwise, you have to look for a different job. It's not about getting lucky. It's not about being born under a certain star or with a certain natural talent or ability. It's a job. Don says that 1 p.m. webinar link Michael posted is for next Thursday, not today. You're talking about Bert's webinar. Just give him a call, 866-928-3310. 866-928-3310, and he can give you the correct link. I don't have it on me, or I would pop it into the chat box for you. In case anybody didn't write that down, this is Bert. Is it possible Bert's not I wasn't listening when Michael... (866-928-3310). That's it. Yeah, call Bert. I don't know if he's having a webinar today or not. I think he did not have one last Thursday, but I think he is having one today. And it starts at 4 p.m. Eastern. Is that right? Very good. 1 p.m. Eastern? Well, considering it's 2 p.m. Eastern now, 2:15, I'm guessing it's over. When did you realize it was the wrong link? This candle we were just talking about, it's got 17 minutes left in it. Okay. The zone holds. If it continues to be good support, it still is. People who are long probably have their stops, right about here. Makes sense, right? And so we could chase this uncertainty because the trend is down. Even though we're catching a rally here, or a bit of a bid, the trend is down. There's a lot of ways to know the trend's down. I mean, you can look at the chart and see that the trend is down. There's all sorts of measuring sticks, I guess is what I wanted to say. So if this fails, if this falls flat, then we are simply positioned to take advantage of that from 25,190 to 25,130. That's 60 Dow points, $5 a point, $300 per contract. Not anything fancy, no rocket science required. Just patiently wait and see what the market participants do and how the market interprets their action. And although some people will tell you that you should use price action because indicators lag, price action lags too, because this is a shadow, this is a reflection of decisions made by buyers and sellers milliseconds, seconds, moments ago. That's what you're seeing. Let's look at some more. Russell, last night on the Concierge Trade Alert. Oh, I didn't realize how late the time has grown. Let us get through these. Russell, consider selling 1578. Right there. Swing low. We'll call it, you know, it's 1555.4. If you rounded it up to 1558, you got 20 plus points. At $50 per point. And so this move that's $1,000 per contract. That's what the market made available. Now what you or I or anyone would take out of such a move would depend upon any number of factors. One factor, of course, being you got to be in the market, which means you would have had to have taken action here and sold 1578. 1578. We triggered at 11 a.m. Eastern. Let's see, 2 o'clock. Yes. 11 a.m. to 11:30 a.m. Eastern. That's this candle. The alerts, the Concierge Trade Alerts went out last night at 7:55 p.m. So 2000 hours during this candle here. Okay. And so patience, and we know that this is doing its job, just as it's doing its job here, and as it does its job when we have a bullish cross and price pulls away and price pulls back to physically touch the up close, the whole thing, the whole nine. It's all, see, this part is just as important, if not perhaps more important, because it helps you to stay out of markets that are not delivering what you're looking for. Cash flow, income, revenue. We got a 20-point drop, $1,000 plus per contract, and there's no sell signal, exit signal, no exit signal insight. Okay, this is the X contract, GCLX. Last night's alert was for GCLX 8. Said to consider selling 69.20. 69.20. Should be right about there. Very good. All right. Okay, swing low right here, 68.55. This week's lowest weekly trading zone for the X contract. Lowest weekly trading zone. You know what? I'm getting ready to change the chart. It's a Z, so no sense to even put that there. Well, yeah. Lowest WTZ for the X contract. It's also the lowest for the Z. But I want you to be able to see that when we go to the Z, which we will in just a second. And so from a 68, what are we going to call it? What's the swing low? 55. So what do we got? 45, 55, 65, $650 per contract available. Okay. Your email comes in. You open it. You draw your lines. And then what has to happen is when price hits 69.20, if you want to participate in the trade, of course, then that's when you execute. And did we get an exit signal? We did, right here, loud and clear. Okay, is it well off the lows? Well off the lows. Is this an extended move? No. We can scale it and it will have the appearance of being part of an extended move, right? One more light. Important prices, important areas are almost always tested. So price gets back above the trigger. Here we go again. Now initially it dropped to 68.93. $270 per contract is what the market made available. Back above the trigger, and then down we go again for about $700 per contract this time. You've heard me say it time and time and time again. Important prices, important areas are almost always tested. So many times on this show that I know, you're probably tired of hearing it so often, but the importance is right in front of us, okay? Anyone who took advantage of this trade alert last night, that's excellent. And if that gave you your goal for the day, whatever your goal might be, as a discretionary trader, you've done nothing wrong. If you're looking for additional opportunity beyond and above, then you just don't have to look any further than down the road. And I wrote just briefly yesterday about this. As a passport holder, which means you have access to the Concierge Trade Alerts as well as the L2 Logic 247, where opportunity finds you, you will identify areas that have been kind to you, that worked well for you, that gave you that effortless trade that you seek. When price comes back to that area, okay, almost always tested. So you're trying to say that if I had a profitable trade here, that I'll almost always have another profitable trade in that same area? Well, I can say this with certainty. You'll never have such an opportunity if you don't look for it. You got to look for the opportunity and then act on the opportunity. So now, this does not have to change your trading plan. Okay. We always hear about, low-hanging fruit. I think it was mentioned earlier in the show today. I would consider these low-hanging fruit because the areas are already been identified. Trigger, swing low, okay, back above the trigger, down we go again. This, as many times as you've heard me say that phrase on the show, that's how many times we've seen it happen. So just something to think about, okay? In order to generate additional revenue, do you have to learn a new trick or buy a new indicator or learn to trade a different kind of market? You could do any one of those things, and it very well may work out swell. Or you might choose to seek opportunity in some area that you're already familiar with and comfortable with. It's nice to have that option. Now, say goodbye to the X contract. In this current 30-minute candle, 5,524 contracts. As we go to Z, we're triple. So today is definitely the day to roll that if you haven't already. Okay, so now we're on the Z contract. This is still the lowest weekly trading zone, and all trading zones in effect are identical. Whenever there's a rollover, in case you're new, we don't change them. We found that we just don't need to. It's amazing how the new contract across all the markets, S&P, Dow, all of them, adapt. After you see it a few times, you don't even question it anymore. You just say, okay. All right, in Q. Now these are current zones. Like this is 60-61. This is 44-45. This is 38-39, and this is 90-91. Okay. So price got to the zone, consolidated, dropped to the zone, consolidated, dropped to the zone, got rejected. Now this is rejection without actually, hang on, 70, 90, did it? There we go. So we missed it by 3.5 points. Swing low was 70, 94.50. But we hit the zone. Now think about this too. This was a green, this is a 30-minute candle. At one point, it looked like it was going to slice right through it. Yes. Now, as we have a new 30-minute candle, which has 29 minutes left in it, 28, just getting started. But do you not find it interesting? You know what? I said we have to get done, because all right, so we're going to get done. I'll go down that road another day. On the NQ, consider selling 72.15. $72.15. There we go. Swing low. 72.10 1/4. So that's 4.75. And that's not quite $100 per contract. NQ, $20 per point. This is that exact 72.44/45. Fiddle with this, just wanted to print there. Can you do that? Thanks. 72.44. There we go. Okay. I used to draw this practically every day, and I only stopped drawing it because, well, I'd been drawing it every day, but every day almost always presents the case. As you move through a zone, not just because it's sliced, okay, but also because it's sliced, I'm bringing it out, or drawing it out. A leg, a retracement, and a leg. And then we run all the way back up. No, we did. You see, it's that same repetitive syndrome. Alright, so last night on the NQ, consider selling 72.15. Initial trigger came at 10 a.m. Eastern, and then again during the 11 o'clock candle. Okay. Through the zone, back confirm good resistance, continue. Leg and a retracement, and a leg and a retracement, and a leg and a retracement. It's like one of those drawings that they would hand you, you know, in school, elementary school, kindergarten. What's different about this picture, or what's wrong with this picture, or I guess, you know, what comes next? I mean, you've had those types of tests where I'm not sure which ability they're trying to test. Cognitive recognition. Yeah, that sounds good. Leg retrace, leg retrace, leg retrace, leg. We're 6 minutes into the life of this candle. From 72.15 down to the swing low, 70.94. 72.15. 70.94. 121 points. 121 times $20 a point. It's $2,420 per contract. Now, that's what the market made available based on that alert. So if you had the email in your inbox last night to consider selling 72.15 on the NQ, you either took advantage of it or you didn't. If you took advantage of it, then this is what the market made available. And it made it available in stages, if you will. A leg and a retracement and a leg, yeah. Now a retracement. If you look at just the last leg, would that be this? No, just the last leg would be this right here. Okay, so let's do that. Price is right up against the 62% Fibonacci retracement. In other words, if it takes out the high of this candle, it'll probably go back to challenge that retracement high. Once we exceed that high, then we go from deeper retracement land to potential reversal. But for those of you that were on the ride down, that's for you. Now, has there been an exit signal? Ooh, close call. Maybe it made it. Didn't. About as close as it gets. There was just the tiniest peak of green above that step line, then it would qualify as an exit signal. However, considering the fact that you're up testing resistance at a zone, it might be worth hanging around to see if your short-term investment has any more dividend to give. If you did get an exit signal here, you very well may hear. Again, this 30-minute candle is only 9 minutes old. All right, On gold, last night's email said to consider buying 1230, and we put in a high up at 1233.60, so that's $360 per contract available. That's what the market made available. Back to the S&P. And our good word for the day. If you have any questions about anything, put it in the chat box. Tonight is a partners workshop, so that's 9 p.m. Eastern workshop. That is for passport holders, that is for partners. Okay, if you're in that category, I look forward to seeing you there tonight. A good word for the day. Proverbs 23:22. Listen to your father who gave you life, and don't despise your mother. You don't learn how to be a parent in school or college, you learn it on the job. And you make lots of mistakes, ones you sometimes look back on and cringe, but through it all, you love your children and you want only what's best for them. So what's the point? If your parents failed you, then you probably have wounds that need to be healed. And God says in Exodus 15:26, I am the Lord, your healer. Don't fall into the trap of self-pity by buying into the idea that you came from a dysfunctional family. My family put the fun in dysfunctional. But we'll save that for another day. Some families are better than others, but all of them have areas of dysfunction. Look back and consider your parents' circumstances and some of the challenges that they faced while raising you, and perhaps you'll be able to view the mistakes they made with a little more compassion. They're human, just like you. They made mistakes, you'll make mistakes, everybody makes mistakes, because nobody but one is perfect. By showing compassion towards them, you'll be better able to show compassion towards yourself when you inevitably make mistakes with your, at this point, maybe grandchildren. And then this is important. When your children see you extending grace towards your parents, they'll be better able to extend it to you. See, there was something in this for you. So if you need to forgive your parents, if you've been carrying this thing your whole life, I was mistreated, and I'm not making light of that. Some people had truly horrible, abusive, tragic childhoods. And nothing can change what happened. What can change is how long you carry that and how you let it color and affect your thoughts, words, and actions today. That is important. You can't change what happened then. You can't fix what went wrong back then. But you do have the ability to prevent things from going wrong this point forward. You have that ability. So again, if your parents wronged you, forgive them. God's forgiven you, He's forgiven me, He's forgiven us all. Or He's willing to forgive us if we ask. But my parents never asked. They were just mean. Well, you forgive them anyway. Someone does not have to ask you for forgiveness. For you in your heart to forgive them. And that's where it matters. But it doesn't hurt to tell them too, if you still can. If I don't have that option, I can't. A lot of the things I did, I wish I could tell my parents I'm sorry for, but I can't. I don't have that option now to sit down face to face. So you gotta work at just letting go, letting God. And just remember, be reminded, whenever the enemy tries to surface it, just remind the enemy of all that God has forgiven you of. Show the same grace and compassion to everyone in your life, including your parents and your children. The same grace that God extends to you, the same compassion. And pray for them. If they're still alive, pray for them. When you're praying for someone, it's hard to complain about them. That's our good word for the day. Partners Workshop tonight, 9 p.m. Eastern. I gotta remember to say that right. Workshop tonight, 9 p.m. Eastern. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.